Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope everyone's having a fantastic start to your week and had a relaxing weekend. In today's video, we are taking a look at the current short-term developments over the weekend, our expectations moving into the new week, and of course, the upcoming weekly candle close in 10 minutes. By the time you are watching this video, the weekly close would have already occurred and we'll be discussing that in the video today. Now, before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. We'll be taking a look at both the macro and the short-term charts, discussing the recently developed short-term uptrend, the retest of this trend line, and the probabilities for directional continuations upward and down. We'll also be going over the impact these directional short-term moves may have on the macro charts, relating that back to the weekly close and our high time level structural and technical levels. If you were interested in more of this kind of content, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you were interested in taking your trading to the next level, join us in the VIP channel. To do so, click the pinned comment of the free channel, contact me by clicking the admin name here, or click our first link to find a 50+ month trading track record, or the second link to see a 10+ minute video inside the channel showing you what you'll get access to and how it all works. Check it all out, guys. We have over 700 members, have been operating since February 2021, so a very, very long time, and we look forward to seeing you in there. Let's dive into the content. So as we can see, 9 minutes remaining until the weekly candle close, and it is very unlikely this current weekly close is going to break and close above that critical level of resistance at 89,000. Nevertheless, the weekly candle close has been able to at least sustain above the 50 EMA for another week, indicating that not only have we seen a massive correction to the 50 EMA, we have seen some sort of reaction at these levels. We have seen demand at these levels, and with that, we have been able to sustain above that critical level on the weekly RSI at 44.62. This, although doesn't confirm we are going to continue upwards through the rest of the new week, but it does show us that at least at this range, we have seen a degree of bearish exhaustion, and we have seen the buyers attempt to continue to step back in. The biggest question at the moment is, are we going to see this buying pressure continue to absorb the selling pressure to the point at which the trend actually reverses? Because currently on the daily chart, as we can see by this downtrend, we are still sitting underneath this multi-month downtrend. Now, this multi-month downtrend is very, very important, because if we move to a weekly chart, we can see that the downtrend eventually will apex with that 50 EMA on and around mid-April. We're looking around the 14th of April, around about that date, maybe give or take a day or two, depending on how volatile the price action does become. And as we know, the loss of the 50 EMA on the weekly is going to be the trigger for the loss of that critical level on the RSI, which is essentially confirming that we are going to see a steep correction. So to put all that in a very quick summary, Bitcoin needs to see this bullish strength, which is developed on the short term, continue aggressively to result in a break of the macro downtrend here and that $89,000 horizontal resistance before we see the 14th of April. So we've got about, what is that, about 20 days, around 20 days for Bitcoin to actually see that continuation upwards. Otherwise, we do have that risk of a much steeper correction. Let's move over to the market data. We'll come back to that in a second. 24-hour volume up 18%, 113 billion. Very, very low still. Again, as we enter the weekend, volume significantly falls. As we move through the weekend, we see volume kind of plateau at that $100 billion level. And of course, as we enter the new week, we start to trickle upwards a little bit. Liquidations, again, pretty low, 114 million, and we can see 50 million coming from longs, 63 million coming from shorts, immediately telling us again, over the last 24 hours, the price action has more or less been chopping with not very clear short-term directional moves. And we see the liquidations massively skewed in one direction. It is pretty likely we have seen strong directional moves. When we see pretty even liquidation numbers, it is more or less likely that we have seen a degree of chop in the price action. Moving over to the DXY, a little bit of a bounce on the weekly here. From that midline, again, watching the reaction at that midline over here, we're sitting between the 50 and the 200. It is likely we continue to chop for some time here. If we do drop below the midline, it is likely we will see a correction similar to what we saw over here, where we correct all the way back down to the 200 moving average. Excuse me. If we do see a continuation upwards here, we've got some major levels of resistance, and I do not expect that to occur. In fact, we've got a horizontal consolidation. Deviation to the top side generally results in deviation to the bottom side, so the expectations are more toward the downside. However, developing and current economic events, such as, again, the potential for more tariffs, may impact the DXY. So we do need to pay very close attention to that, as new events can pop up which play a massive role in impacting where the dollar will go. If we're taking a look at the S&P 500, we did have a weekly close occur here. Not an amazing weekly close. We are watching for a weekly bullish engulfing candle. We were hoping for the weekly close to close above the opening price of the prior candle at that black horizontal line. We didn't see that, but we have seen this weekly open green thus far. This is going to be a very important week. We need to see this weekly candle engulf the opening price of that prior red, meaning we need to close this weekly candle above $5,750. If we do see that, it is likely we will actually see a reversal in play for the S&P 500, potentially back to around that $6,000 mark. However, if we do not, this is going to still be a major point of resistance, which could push that price lower again. So we're watching very closely, I think, this week for both Bitcoin, being that it is coming very close to that downtrend and converging from the uptrend, which we'll discuss, and the S&P 500 is actually going to be very, very important. And we'll be able to tell where that occurs or when that occurs sometime during this week. So paying very close attention to those levels. Now, before we get into the crux of today's analysis, guys, if you're interested in supporting the content even more, if you're interested in supporting yourself in your trading journey and interested in trading on exchanges I use on a daily basis, you can sign up to BitGet, BitUnix, or BingX. These are the links down below. You'll get a lifetime trading fee discount of 15% of all your trading fees. And of course, you'll support the content. Check it out. It takes a few seconds, and we'll see you back in the video. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's get straight back into the video. So as we can see here, this is going to be our weekly chart. Now, this is a chart we've been discussing for around about 2 to 3 weeks now, as it really is going to be the most important chart we are watching, and specifically we are watching the momentum. And the momentum has been a massive leading indicator through the history of the last 2 years of price action, but we can also use it as a massive point of invalidation of the current trend. If we are talking objectively, the trend is still up. We are still in an overall uptrend. We have seen some aggressive weakness at these highs here, hence why I personally sold all my Bitcoin on the 14th of December. I personally sold all my altcoins on the 14th of December, and I've been in all cash. And we have seen these short-term pullbacks, but we're talking objectively from a technical perspective, the trend is still up. But just because the trend is still up, it doesn't mean the probabilities are in favor of continuations upwards, right? The macro trend is going to be pointing upwards until we get those invalidations. And at the moment, we're getting very close to those invalidations. So we do see a breakdown of that 44.62 on the RSI. It is highly likely that for the first time since we saw the breakout in January 2023, we will be entering a position of macro weakness, which could develop into an even larger downtrend than what we have seen since that 110K rejection. So if we take a look at the 44.62 on the RSI, we can see that we have managed to establish a pretty good level over here that we've actually bounced from now 3 times. And yes, this recent one has been a bounce thus far. If we take a look at when we first broke out of this region, the breakout occurred on the week of the 9th of January 2023, on that aggressive candle over here, taking Bitcoin from around 17,000 all the way up to around $21,000 in 7 days. That was as a consequence of the breakout of that falling wedge weekly structure. Since that point, we have not only been in a macro uptrend, but the price on the RSI, or should I say the RSI, has been able to maintain above the 44.62 level. And therefore, if we were to drop underneath that region, it would suggest we have seen a negative momentum shift, or at least momentum is at a position of weakness in which we have not seen through the last 2 years of price action, which could suggest the price action is at a value of which it is unable to sustain. It means it's overvalued in terms of the strength. It could see a correction toward the downside. So if we are looking at the RSI over here, we do have a very clear level we're watching. That horizontal level we were watching, we have had 1 retest. We have had 2 retests. Both of these retests occurred at critical levels. This was the horizontal low of the horizontal consolidation, that final retest low before it saw a strong consolidation and continuation. The descending channel formation, again, that was the final low right over here at the 50 EMA before we saw a strong continuation. And yet again, we are seeing a final low over here at the retest of the 50 EMA for the 3rd time. So the 50 EMA has been retested on every single time we have retested the 44.62, and therefore the 50 EMA is going to be a leading sign that we are going to lose the 44.62, which will be a leading sign that we are going to correct into this mid $50,000 region. So again, if we lose the 50 EMA, we lose the RSI. If we lose the RSI, we correct into that $55,000 region, into that 200 moving average. So you can see why all of this is so important. Now, we have just seen the weekly candle close as we are talking now, and excuse me, my throat's not the best today. We can see we have actually come up, retested, and we have failed to close above that $87,200 to $89,000 region. Now, if we move over to a daily chart, we can see this range in a little bit more clarity. This range over here is going to be our period of support we had temporarily over here at 87,000 and our sell side liquidity in this major consolidation range. Essentially, the lowest point of support in this high time frame consolidation. A prior support turns into a current resistance. So this is still the region of which we need to actually break through to be bullish. While we remain underneath here, we are expecting continuations lower, and these continuations lower are possible. As we mentioned in the intro of the video, it is really a battle of time over here, as, like we said, on the 14th of April, we are going to see this downtrending diagonal trend line cross through the 50 EMA. And if we see that, the probabilities that we drop below that 50 EMA only go to increase. And if we see the drop, well, we already know what would happen from there, as we just explained it. So we really need to see the break of that downtrend. If we draw a downtrend in on this chart here, you can see the downtrend does pass through this horizontal resistance, and it passes through the horizontal resistance on around the 30th of March. So the end of March over here, meaning the most ideal time for Bitcoin to break through its downtrend is going to be before the 30th of March. The reason being is then we can tackle 2 birds with 1 stone, the horizontal level and the diagonal level. But if we leave it until, the 10th of April, we may break up and then only come to retest this level of resistance just to reject again. So the diagonal level is important, as it will essentially indicate the downtrend has ended, and it gives the potential for our uptrend to be created. It doesn't necessarily mean we are going to 100% see a continuation upwards. Diagonals don't suggest that, but it gives us the potential to see those continuation upwards. We need to really break above that horizontal. That horizontal is the critical level in terms of horizontal levels that we need to actually get above and sustain as support to then see an actual strong uptrend develop. So at the moment, we have seen a nice rally into the weekly close. If we look at the short term, we've seen the price action push upwards a little bit. Again, I'll say it again, it is not enough yet. This is not enough of a move to be confident that we are going to see a break back into 100, break back above that downtrend, even break this horizontal. In fact, we are still, if we flip the chart, here is the chart. This is a flip. We have a horizontal support. We have a supportive uptrend. Until this level breaks, we would not expect the price to push back down. In fact, we'd expect bounces and continuations. The trend is your friend until it ends. Now, I do want to see, of course, I want to see the price go up. This price action is boring as heck. I'm getting a little bit bored. Of course, I'm all out of the market. So up, down doesn't really matter. I don't really care what happens. But, you know, it would be nice to see some green in the market again. We've been essentially going down now since the beginning of 2025, so nearly 3 full months, which is, it is what it is, guys. You know, we can't complain. At the end of the day, we've had a fantastic 2024. The entirety of 2024 was fantastic. 2023, fantastic. The market has phases where we have these aggressive uptrends, we have phases of these aggressive downtrends, and we have phases of consolidations and chop, and that is just how the market works. So if we're taking a look at that macro chart again over here on the weekly, those are the key levels we're watching. It is not enough yet for Bitcoin to confirm a continuation. It is looking good, right? We are seeing some strength develop on the short term, but we need to break through those horizontal levels and that downtrend. That level needs to break. So let's go down to the hourly chart now. If we're taking a look at the hourly chart here, guys, we have got some pretty important levels here. First and foremost, we have got this uptrend we have established and essentially been sitting above now since 11th of this month. So around 2 weeks, almost 2 weeks. Now, we did temporarily drop below it over here, but we were able to close back above again, so not too much of a concern. And we are pushing away from it right now. Again, we are watching this level. It does line up with the POC level. All these levels below, these recent lows, are all going to be areas of support. So we've got our lows, our higher low, our higher low. These are all going to be support levels. If we drop below the trend line, we are watching for reactions back in these regions. Only if we drop below 80k, as we said in our prior video, only if we drop below 80k would we then expect a more volatile and violent correction downwards. Until then, we do have the potential to break through that trend line. So again, if you're looking for immense short-term clarity, there really is none. This price action is absolutely crazy. There is no clear structures forming. The price action is simply going through periods of chop and consolidation, followed by violent liquidation moves on the short term. There is no clear patterns. There is no clear structures. There is only a clear trend. So when we have a clear trend, we need to be aware of the trend and the consequences of when that trend breaks. And we need to watch for higher time frame levels of confluence to determine where the short-term price action is going to move to. So in terms of this, the potential movements will be upon the breakdown of the trend line. We are watching for these lows to be retested. Until then, we are not touching. We are waiting. We are waiting to see how the price action reacts at these higher time frame levels. So we're watching again that higher time frame level of resistance. That is going to be today's analysis, guys. I hope you enjoyed. Have a fantastic day. The weekly close has occurred. Not too amazing, not too bad either. Pretty neutral, and I'll catch you guys in the next video tomorrow. See you then.